There are three primary questions that you should be asking yourself as it pertains to long-term care. The first question, Andrea, is should you buy long-term care? The second question is can you buy long-term care? And the third question, Andrea, is how do you buy long-term care? Now, if these are some of the questions that you have been formulating in your mind as it pertains to long-term care, you're going to want to stay locked into our retirement education concept video today because we are going to give you a very unique solution to those answers. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. Thank you for tuning in to our Retirement Education concept videos. These videos were created to help to make the difficult and confusing retirement process simple.
Absolutely, Andrea, because there are so many retirement strategies out there and so many retirement concepts and retirement products that consumers will have to digest, which is why we always utilize a team of expert advisors to help us formulate a financial roadmap that will let our clients know when, where, and how they can reach their retirement goals.
For additional concepts on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. Carson, Americans in long-term care facilities have unfortunately seen the worst of this pandemic, right? So for those who have not entered this stage of life, how can they feasibly protect themselves from the major costs of long-term care, especially when studies have shown that the average cost is between $6,000 to $10,000 per month?
Yes, Andrea, and that is a very good question that you're asking today. And that's what we're going to be talking about in this retirement education concept video. A very unique solution to that question, which may be a tool that many of you can use, which is a single premium long-term care plan. So we're going to talk about the benefits of that particular plan. But before we do that, there are always two rules to retirement income that we like to give you. And Andrew, what are those two rules?
Well, rule number one is to never run out of money. And rule number two is to never forget rule number one.
Okay, so let's go ahead and see if we can actually uncover the benefits of utilizing a single premium long-term care plan.
So Carson, what is a single premium long-term care plan?
Yeah, Andrea, a single premium long-term care plan is exactly like it sounds. Someone takes a single amount of dollars and they actually place it into a long-term care plan. So let me just give you an example of how this might work. Let's just say you have an individual who has some money set aside for some other purpose, for like an emergency within their retirement. Let's say this amount is $100,000 per se. So you have this $100,000 and you're looking to use it for a major emergency, whatever that may be. But what you can actually do, Andrew, is take that $100,000 and repurpose it into like a single premium long-term care plan for a major health issue down the road, and end up growing those funds anywhere between 3 to 7 times more than what that $100,000 is doing for you in your bank right now. So let's go ahead and take, for example, if you have a healthy 60-year-old female. She has $100,000 sitting in her savings or checking account waiting for a major emergency to take place. Well, we know that the average stay in a long-term care facility is anywhere between 3.5 to 5 years. And you've already mentioned in your question earlier that the stay in a long-term care facility can be anywhere from $6,000 to $10,000 per month. Now, so imagine how fast that $100,000 could just go away. But let's just go ahead and imagine that this 60-year-old female decided to speak to a qualified financial advisor about this situation and was recommended a single premium long-term care plan. Well, that money could be placed in a plan with an inflation rider. Let's just say it had an inflation rider as well of 3% growing each and every year. That same $100,000, by the time this female was at the age of 80, when it's more likely that you're going to need some sort of long-term care, will be worth approximately $600,000. And this is not the end of that story. That money could be used for her long-term care needs tax free as well. And another major aspect of this, Andrew, is that when a person actually has covered their major long-term care needs, they can actually take their other funds and invest it a little bit more aggressively now to fight off inflation as well, because they've covered a major health expense that could occur down the road, in which we know studies say that 7 out of 10 people 65 and older will need some sort of long-term care.
Well, Carson, that sounds like a common sense approach to long-term care, but there must be some disadvantages or everyone would be doing it, right?
One of the major disadvantages here is that you first have to have the money to put into a single premium long-term care plan, right? Now, if we look at the example that I've been using, we know that, many people may not have $100,000 sitting around in their checking or savings account for a major emergency. So we understand that. Another disadvantage is that even if you have the money, you may not have the health to actually do it. So you have to be in good health as well in order to qualify for a single premium long-term care plan. And one other aspect of this, when you have a regular long-term care plan, when you're paying monthly premiums for it, you can actually, in some states, use that as a tax write-off. Or if you're putting money in an HSA account, a health savings account, you can also have those dollars that you're putting inside of that HSA account to be used as a tax-deductible expense on your tax returns. You don't get that advantage with a single premium long-term care plan. But with that being said, with those disadvantages, I believe, for my clients, of course, that the advantages far outweigh those disadvantages. For one thing, the reason why I say that is that when you have a single premium long-term care plan in your portfolio, you never ever have to worry about a rate increase like you may see with other common long-term care plans, or what we call original long-term care plans. Also, Andrew, when you have a single premium long-term care plan, it's not a use it or lose it scenario. So imagine this, you did the right thing. You were very smart. You took out a long-term care policy. You were paying monthly premiums on that. And then all of a sudden, something happens and you don't even ever use it, and that money goes away, just goes to the insurance company. With a single premium long-term care plan, if you don't use it, you don't have to lose it, because a lot of these plans are basically hybrid plans, meaning that they have a life insurance attached to it. So that $600,000 that we were mentioning before could, if it's not being used by the participant, it can be left to their estate as a tax-free death benefit as well. And one other major aspect of this, when you're paying for a long-term care policy, we know that in retirement, situations can change and your income could change. And if that happens, maybe you decide that you can't afford the premiums on a long-term care policy anymore. But with a single premium long-term care plan, once that is actually done, you never have to worry about that policy lapsing on you as well.
Well, great information, Carson, and thank you for watching. And if you found this information beneficial for you, please like and share it with others.
So I really hope that this information was beneficial for those who are watching. Please remember that these videos are created for educational purposes only, and that you should always consult with your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. And if you are looking for a fiduciary advisor to help you with these types of complex financial matters, we highly advise you to click on the link in the description below to request a complimentary consultation with us.
For more information about this topic or any other topics that we've covered in our other videos, feel free to reach out to our office, use one of the links in the description below, and download one of our free retirement guides, or leave questions or comments in the section below. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.